Which way is the market headed? Gautam Chhaochharia from UBS joining in for a chat exactly on that. Gautam, hi, good morning. Good to have you on the show. And day in and day out, one is now getting a little tired and fatigued of counting the consecutive days the FII sell-off has now stretched. Why exactly are the FPI selling? It's the higher taxation, yes, but to think of it, there are some positives as well. In spots, earnings are picking up. Yes, there are all the growth concerns coming in, but one also has to remember that oil prices are stable. You've got the rupee, which is holding out pretty comfortably. And, the fact of the matter is that we are in a low interest rate regime, both globally as well as locally.
Good morning. I think there's not a single factor. It's not about the tax issue specifically that the FIs are selling. The context also is that at the beginning of the year, we have seen strong FII flows. And YTD, the numbers were quite strong. What we are seeing possibly is profit taking, etc. Post the budget, because budget clearly was a disappointment in terms of investor expectations for reviving growth or setting the stage for the second term of Mr. Modi's government in terms of reforms agenda, in terms of growth measures, etc. It's a mix of many things. It's largely profit taking, I would say. It's not something meaningful. If you look at the absolute quantum of outflows versus the inflows which we have seen since the beginning of the year, it's still a fraction of that. So I won't worry too much about that. The bigger thing which is facing markets is the slowdown which we are seeing and what the policymakers do to get it back on track.
Gautam, yes, indeed, there is a combination of factors, but just want to understand from you what you believe the undertone of the market is, because everyone was expecting that once we had a decisive mandate in place, that would be the start of the market move in an upward direction, but that really seems to be a miss right now. On the policy front purely, do you think that, we have seen enough initiative? What else would you like to hear on this front in order to really kickstart the animal spirit, revive things on ground, pick up the capex cycle?
So clearly, I think whatever the government or policymakers have announced has not helped, because it's not just the market's reaction, but even the broader business community and corporate commentary has not been positive post the announcements. So clearly, we need a lot more. Again, things like the tax issue, etc., in itself are not meaningful, but combined with the lack of any big positive measures, it acts as a dampener in terms of sentiment. So what the policymakers need to focus on is to set a stable policy regime, build up a credible, exciting reforms agenda, which will increase potential for India's growth rates over the medium term, and also tap into the golden opportunity which India has in terms of the manufacturing shift happening away from China. So we need to see credible policy and strategy plan with the government to tap into that golden opportunity.
Gautam, what are you making of earnings so far? What would you take away from some of the commentary, particularly from the financial pack as we see it? We've had some of the big ones reported, some still to come.
So overall earnings have been a tad disappointing for sure. While the slowdown was known, but even then the negative operating leverage for some of the businesses have been slightly weaker than thought. So clearly that was a disappointment for investors. For the financials, we have seen even the leading private banks, the growth rates have not been impressive. So we haven't seen when parts of the financial system has slowed down, the remaining part of the financial system lending aggressively to gain market share. What we have seen is even that active or well-funded part of the banking system slowing down and increasing their lending standards rather than gaining market share aggressively. So this is basically the result of the slowdown impact which we have seen from NBFCs, etc., feeding through to the rest of the economy. So this is the early stage. This is not a positive measure, and we clearly calls out for need for policy measures to intervene and get the economy back on track.
Okay, fair enough. we still do need that intervention, Gautam. It doesn't seem like, apart from the monetary policy, there are really no expectations at this point of any other kind of stimulus. What are you hoping to see? Because the only thing the markets seem to be, looking at as some kind of silver lining is the transmission on the monetary policy side, some pickup on that front. We're not hearing anything with regards to big orders, private capex, nothing on that side at all.
So not really. In our view, one, from the government's policy making perspective, there could be potential front loading of government spending and release of payments, something which we picked up from our meetings with policymakers in Delhi last week. And we should see the impact of that in the next couple of months, because April, May, June was a pre-election, then new government formation, etc. So government spending itself, in terms of front loading, we can see something happening in the next couple of months, and also release of payments. Secondly, also the narrative. We still need to see the policymakers build a narrative around both reforms, policy stability, and growth outlook for the medium term. That narrative clearly has not hit the right chord as we speak. So we do expect some kind of rejig or course correction there over the next few months. That will help investor sentiment, and including businesses. And lastly, when you talk about RBIs, it's not just about rate cuts. So one, we're talking about rate cuts. We need more aggressive rate cuts than still sticking to 200 basis point real rate structure. And for transmission also, maybe more infusion of liquidity in the system will ultimately help some transmission. Again, the government policymakers have taken up a policy stance of no bailouts, but even the liquidity infusion and real rates coming down could help for sure at the margin. So a combination of that could help stabilize things. Yes, these in itself will not be enough for the next big capex cycle-led recovery as such, but at least we normalize back to the growth rate levels we were seeing over the last 4-5 years.
Gautam, would like to get in your view as to how you're reading into the kind of risk aversion that one had seen toward the NBFC space, even some of the PSU banks to a great extent. Do you think that with the slowing global growth that the picture is likely to look more bleak, or that you are convinced by the kind of corporate earnings and the kind of credit growth, the commentary that has been coming in from the banks? Just your view on how things have played out.
So this financial system, just like the macroeconomy, there's a lot of circularity there clearly, and there's a feedback loop which develops over time. So while we have seen a step back and higher lending standards, including lending to NBFCs, I think it is a question of time when things start normalizing, and that's largely a question of sentiment and outlook on growth and demand. So if we see the policy measures leading to some stabilization of demand and pick up in recovery, I think these will not be a big issue 6 months, 1 year down the line.
Okay, what about sectors then, Gautam? Where are you focusing right now? Are you reshuffling anything? Will you continue to be, continue to look at financials, or are you also now looking at perhaps some of the other pockets like infrastructure?
So our portfolio stance has not changed much. We still overweight retail liability-driven private banks, oil and gas, property, insurance, utilities, and we're still underweight automobiles, infrastructure, mid-caps, and non-bank financials. And the reason for that is a mix of both valuations, earnings momentum, as well as positioning. So mix of that we think is still a bit too early to be more constructive on these autos and infrastructure names. Maybe in the next 6 months we'll track how the stock prices behave and how earnings stabilize, and then we'll look at it, have a relook at it.
So, talk us through the strategy there, what you're looking at positively.
Which part? Second?
The oil and gas?
So oil and gas, we do like the large part of the oil and gas spectrum. Our favorite space is the refining and marketing, oil marketing PSUs, because there will be twin beneficiaries of both what's happening globally, as well as from a local policy certainty perspective. these stocks do have a lot of valuation comfort, and we still haven't seen the best being priced in there. We do like the gas utility names also, and the broader petrochemical space also is something which we like.
Okay, fair enough. Gautam, what's the view on some of these deals concluding, say like Z, DHFL, etc.? Do you think that all of that will help to a great extent restore the risk appetite that we're seeing in the market?
Absolutely. Any capital inflow which is always welcome by markets and investors, and if the capital inflows flows into assets or companies where investors are worried about credit events, then obviously it's a welcome relief. It's not necessarily in itself going to be enough for driving growth recovery, but it does take away a big overhang or the tail risk for the broader ecosystem.
Okay. Oh yes, indeed. That is going to be, the conclusion of some of these deals are going to be fairly crucial. Gautam, what about the, some of the high beta pockets, the infrastructure space, capital goods? Quite a few earnings seem to have trickled in. You spoke about the overall policy and reforms and what we're expecting on that front. Do you think then, from a long-term perspective, that select names, quality names within these spaces can be looked at?
We think it's still early to be constructive on infrastructure and capex cycle names. Very simply because if you look at top down, public capex, the fiscal space is limited, and in terms of Y&Y, the best is behind us, because even off balance sheet leveraging, as per our analysis, the ability to lever up NHAI and railways, the Y&Y delta in terms of growth is definitely the best is behind us. If we look at private capex, as per one of the analysis our analysts had run, roughly 60% of private capex may be happening in sectors like commodities, infrastructure, energy, telecom, etc., where the outlook is not necessarily linked to just capacity utilization headline numbers we see. And if it's 60%, then if we don't see a recovery there, then a broad-based capex cycle for private sector is also likely to underwhelm market expectations. So it's still a bit early. Where we do have hopes, again dependent on policy measures, is the household capex or basically the property cycle. There we do see the building blocks for household demand and property cycle recovery to come back, but we still see enough policy support and incentives to drive that recovery.
Okay, that's how things are shaping up on that front. And when it comes to, cushioning the volatility with some of those defensive sectors, what's the outlook on IT or even pharma, which has seen an acute underperformance but now is seeing a pickup, Gautam?
So on both the sectors, we are, from a top-down perspective, positioning is neutral. We do like few individual names which we are recommending to investors to buy, but at a portfolio level, we would recommend a neutral positioning, simply because it's not across the sector upcycle in either IT or pharma in terms of comparing to what the stocks are already pricing in. So we would like to be more stock selective, and the positioning also, at least in IT, is no longer as light. So we are recommending being neutral there rather than being overweight the entire sector.
Okay, Gautam, in terms of any specific deal buzz that that you've been looking at, a lot of companies there that we've been focusing on the back of deleveraging attempts, and a look at how perhaps M&As or consolidations would help them to get back on their feet. Do you feel that activity now is becoming a bit more constructive? We've been tracking it particularly with the likes of Z, for example, some of the housing finance names. How's the market reading into some of these attempts?
So individual companies I can't comment, but obviously deleveraging is a well-known and well-accepted alpha creation opportunities in general for investors globally and in India, especially if the underlying business is so solid. Again, it has to be much more individual scenario based, but yes, this theme of deleveraging where there are issues with individual companies, for the broader market sentiment obviously will be a big positive.
Okay, Gautam, great to have you on the show. Thank you so much for taking the time out and speaking with us today. That's the view coming in from the house of UBS and the market, which, by the way, continues to slacken.